Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar kept within a tight intraday range overnight as the resistance level of 67.8090 continues to cap the market. After a brief challenge there, the market is eased slightly lower and still at presently looks for a direction. I feel the longer that we maintain beneath 67.8090 does heighten the risk for a pullback where the 60-day moving average is, and also a key level of 67 figure 15, as a break beneath there would reinstate the downside and look towards the region of 65.90 figure. Moving on to the euro, well, the dollar index, which measures the greenback strength against a basket of 6 major currencies, was slightly lackluster and was relatively flat at the New York close on Tuesday. And therefore, the market is still presently waiting for the key event this week, which is the Consumer Price Index, or the CPI, for April, which is scheduled for release on Wednesday by the US Bureau of Labour Statistics. Investors will be looking for clues on whether inflation is continuing to ease, which may expect to show prices of falling around 5% compared to the same time last year, while on a monthly basis predicts of 0.4% increase. We also get the jobless claims and also the consumer sentiment data. In other talks, the US debt ceiling seems to be adding much caution to the market as investors await on an update on plans for the debt ceiling from the meeting between US President Biden and Republican House Speaker Kevin McCarthy and other congressional leaders at the White House. So looking at the technicals, as I mentioned, the dollar still remains above around 101.22 and therefore looks for the euro to head towards 109, which is a key level. Beneath 109 figure would expose the region of 107, with any advancement still likely to be capped by the resistance somewhere around 109.90 to around 110.60.75. The dollar yen holds somewhat in a relatively bull pattern since rebounding off the lows around 132.80 to 133 last week. In light of the pattern, I still feel there is further upside gains, but we're looking at these technicals as a little bit weaker, so therefore may see a pullback first around 134.85 and then head higher towards 136.20.30. As Super Thursday approaches, the market was a little bit mixed overnight, but still respecting the level roughly around 125.70. In light of the pattern, I don't want to get too bearish due to the fact is that the technicals are still holding relatively firm and therefore could see a rise up towards 126.55 or up to 127.15.30 and reassess. And also gold is holding in an inside range day after last week's heavy sell-off, but the market still attempts to take on the challenge as it looks at 2038. I'm not going to get bullish, but due to the fact since that heavy rejection from that key level, which is seen around 2068.74, could see another down challenge and eventually reach the region somewhere of 1,994.96 and reassess. Since the strong rejection around $65 a barrel, the market's still holding higher and therefore looking to its call of $74.10.30, which may see a little bit of profit taking. However, above there does expose the region to around 77 cents. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the ECNTRADE report, and I do hope you enjoy the rest of the day.